Recording. Okay, good morning. This is your morning buzz. I hope everybody can see my screen. Flexible benefits. This is actually an hour-long CE approved, HR, CI, and SHRM CE approved presentation. You can't get those credits today because we have shortened it drastically. But if any of you are interested in a different avenue where we are presenting the full thing, let me know and we'll be happy to share that with you. But we're going to jump right in. In case you don't know me, I am the 401k lady. I'm all over LinkedIn. That's my LinkedIn code. I post weekly informational videos and all types of informational snippets. Please do give me a follow. And then the YouTube channel 401k lady has every video I've done for like the last 3 years. So if you want to go back and look at all that content, it's all there for you. I'm a 401k consultant, so I work daily with HR professionals, CFOs, retirement plan sponsors, and of course, when we're in there talking about the 401k side of the benefits, we definitely get exposure and hear about everything else that they're dealing with. So we like to provide information and feedback on all of those other benefits. Live in Bowling Green, technically work out in Nashville, but Kentucky, Tennessee territory with our national firm, which is Strategic Retirement Partners, which is a retirement plan consulting firm. And then that's our team. Brian's on vacation. So Brian's in Florida. We can all be angry at Brian right now. Okay, so let's just jump right in into what we have today. So I'm not for sure if you've actually heard of it. There's an organization called the American Benefits Council, and they are actually designed as a nonprofit to represent employees and employers. And their whole goal is to actually connect what employees and employers need with public policy. So it's like a public advocacy group. And in 2014, they created this thing called their 2020 vision. So 6 years, of course, pre-COVID, they designed their 2020 vision, and they had 4 main bullet points that they hoped to achieve. And the third one that they were expecting benefits to look like in 2020 was empowering individuals to take more direct ownership of their benefits. And I actually kind of went through this report not realizing it had been written in 2014 and was like, man, they really hit the nail on the head. If you read some of the fine print and what they were hoping to accomplish, making benefits more efficient for the employer, but also having the employee take more ownership over them. And I've kept thinking, man, they're spot on. And then I realized they had built this report, 6 years ago. And I thought, wow, that's super interesting. But this is the trend that we're seeing. And of course, the title of this presentation was Flexible Benefits. And we're going to show you the 8 ways that employees are wanting to see these flexible benefits in the future. So back in 2019, this was a MetLife study, found that only 37% of employees strongly believe that their employer benefit communication is customized to address their personal situations. And if you actually look at the data, 2/3 of employers would survey that their benefits are superior to others, or that they do a better job of communicating them, right? That in a whole, yeah, where 2/3 would respond that they're better than everybody else, but less than 40% of employees feel that way. So we often ask ourselves, what is this gap? Why do employers feel like they're doing a great job and employees feel like they're not getting what they need? And so what we ask ourselves is this a communication issue? Is this an education issue? Or are we just not offering the right benefits? And I would say it's probably a combination of all 3. So what do our employees want? Well, it changed. We had a huge inflection point. I was talking earlier with some attendees about COVID-19 and how much the world changed. And we don't have as much data, right? Like, I think we all can't wait to see what things look like in 2 years. We can't wait to see survey polls before and after. We have some data, and that's what I'm actually going to go through today. Some before and after surveys. But no doubt, I think we all agree that COVID-19 was a massive change in our lives and of course, benefits offered. So the next big thing is flexible, and that's the name of the game, whether we're talking about 401k plans or health insurance or EAP programs. The idea that we can offer one benefit that's going to meet the needs of all of our employees is really far-fetched at this point. The fact of the matter is each individual employee has their own issues, their own concerns, their own family stressors, and if we truly want to maximize our benefit dollar, if we truly want to take every dollar we're spending on benefits, which most of our companies are spending quite a bit, and we want to get the most ROI, which now I'm speaking investment language, return on investment, The way we do that is by letting the employee choose where they want that dollar to go, because only the employee can determine the best value of that dollar for themselves. So flexible benefits is going to be all of the rage. And we saw that particularly around the pandemic. So what you're looking at right here is a Hartford 2020 Future of Benefits study. And if you want to follow up, shoot me an email, shoot me a LinkedIn message. I actually have the full infograph and I've just knit a portion of it for you today. Here's what's interesting about this study. The first wave of HR professionals that they surveyed was actually done at the end of February in 2020. So like COVID was on the horizon, but none of us truly understood what was happening at that point. Wave number 2 was the same survey population, but it was done in about June. So you're getting to see how people's responses, how HR professional responses changed from pre-COVID to immediately after COVID. And if you think back to June, many of us were still completely in lockdown at that point. So you can see how obviously there was a big wave and concern over the social and political climate, which if you remember, we had quite a few social and political upheavals. We had the presidential election coming. That all makes sense. Caring for family members, of course, became a priority for people. Major concern for debt, which makes sense. Work-life balance was a top 3 stressor. The bottom ones are the top 3 stressors. Amount of workload, and then saving money for the future. So I thought this was an interesting snapshot. Again, like I said, there's a full infograph and I can provide it in the follow-up, but this is really one of our first surveys we had of like immediate pre and immediate post. And you can see just how much the top concerns changed for our employees. So the perception gap. We talked about how nearly 2/3 of employers believe their company's overall benefits package is better than what's offered by other companies, but less than half of employees feel that way. So if anyone feels emboldened to toss something out in the chat about maybe why they think this is the case, is it the communication, is it the education, or are we just offering the wrong benefits? We see this all the time. As 401k advisors, we want nothing more than to sit down with your employees and talk about saving for retirement. But the fact of the matter is, many of the employees out there aren't even thinking about retirement right now. They have other things, other immediate concerns that they would actually like to be addressed. So what is it? What are the top 8 things that employees out there care about when it comes to benefits, and how can we provide those? Number 1 is not going to surprise you guys at all. The number 1 desired benefit moving forward is working from home. This is not a shock. Actually, there is an organization called Global Workplace Analytics that studied working from home and remote work well before the pandemic. And of course, they blew up mid-pandemic, but they strongly advocated for flexible work policies. And they had a lot of data around the subject. 80% of employees surveyed would like at least a partial work from home, work from office schedule. 80%. 1/3 of the respondents said that they would actually take a pay cut if they got to work from home. So I think that's all very, very interesting. According to Workplace Global Analytics, they say about 60% of the jobs out there can be remote, and they expect 25 to 30% to still be remote by the end of 2021. So just a couple of stats there on the work from home. I can tell you, we talk to very small companies, we talk to very, very, very large companies, and we talk to logistics companies, right? Like companies that are actually delivering your mail, and they're sitting there being told by senior leadership to figure out the work from home conundrum. Global Workplace Analytics also found that 60% of the time when an employee was in an office setting, they weren't at their desk. And they estimate that you could save $11,000 an employee by shifting them to work from home. Now, that's an average, I'm sure, for the national. That's going to skew depending upon geographic location, but working from home is not leaving anytime soon. I don't think that people would disagree with that. Number 2, what employees want: online enrollment and digital resources. This also came from that Hartford study. More than half of the employees expressed an interest for all online benefit education and enrollment experience. we kind of joke when we're talking to clients, whether it be no matter what the benefit is, if someone is still using paper forms, we know that they haven't evolved. They certainly haven't evolved since COVID, but even prior to COVID, paper forms are just wrought for error, human error, getting lost. There's no tracking of it. There's no accountability on either side. Where is the paper form? Who has it? People weren't saving copies of their paper enrollment forms on their, home laptops or computers. It's no surprise at all. And I would imagine even if you ran this survey again now, that number's got to be even higher. So let's talk about that and let's break it down. And there's a couple of statistics on here. The more than 50% want an all online benefit education and enrollment. 45% want the ability to access or enroll in benefits during business hours. That statistic kind of confused me. To me, it would be like, I would have thought 100% would want to enroll in their benefits during business hours. But I'll highlight the top right, the ability, 43% with the ability to access and enroll in benefits outside of business hours. And then the next one on the bottom left, 42% want to enroll in benefits with a person, an HR contact, or a benefit advisor. Those two are the ones that we have personally experienced the most. I cannot emphasize the outside business hours. Now, it's probably because we're in a little bit more technical of an industry, being the retirement plan, but there are so many times that we are asked for outside business hour meetings, primarily because the plan participant wants their spouse to be a part of it. That's always the conversation, which I really don't blame them. And a huge demand for help in enrolling. Again, whether it be the HR person or us as a benefit advisor or the health insurance or EAP or whoever it is, people want somebody to talk to, even in a virtual setting. So just an example of how we've had to flex, and I know others have had to flex. We used to go on site with the health insurance guys and whatever benefit advisors were there. We would do either targeted education meetings or long group meetings, and then we would do the one-on-one enrollments. Well, of course, we couldn't do that for many of our clients the last year. So created our own virtual enrollment system where our clients had a specific login link to do the scheduling. We had targeted presentations that were then recorded, saved either in YouTube specific to the company or in general that everybody could access later. We put a huge emphasis on what we call on-demand educational information. And I think this is something you're going to see across all benefits because we kept hearing over and over again, I really want my spouse to be a part of this. Can we talk after 5 o'clock? And that became very obvious to us that it was a priority for our clients. Okay, number 3. EAP programs. So I was laughing. I was saying of all the top 8 I'm going to talk about today, this is probably the one I know the least about, EAP programs. The top EAP programs have not changed. The top EAP programs provided are financial counseling. Let's see, let me flip it a little more. Financial counseling, bereavement, ID theft, and estate planning. So those are still the top 3. What you're looking at today is research that was done by a company that's not an insurance-based EAP program. They're kind of like an EAP consulting company. And what they're mapping for you is the changes in other EAP programs. So we're looking at the trends of what's becoming more common, okay? And you can see at the top, those are the ones where the popularity rose drastically, and at the bottom where the popularity declined. And I found it very interesting that literally the amount of employers offering funeral concierge services doubled, right? I mean, that was 100% growth change. And then estate planning was huge. So that is an idea of just which EAP programs are, at least the employer is identifying that they want to provide. We were having an interesting conversation prior to the call about utilization. What I don't have are utilization statistics on the EAP programs. And identity theft stayed flat. Who would have thought, right? I would have thought more identity theft, but. Okay, number 4, dependent care programs. So this is a type of FSA. You may be familiar with like the medical FSA. What's so beautiful about these programs is the employee can make a contribution straight from their paycheck. They get a tax deduction on that contribution, and then the account is targeted for a certain benefit, and most people are familiar with the medical FSA. The dependent care FSA program is absolutely blowing up because child care expenses last year absolutely blew up. Daycares were closed, school was out. The government is supporting this idea by literally doubling the amount that employees can contribute. If you have dual income households where you have two working parents with young children, or you have high income earners with young kids, honestly, anybody paying for childcare, this is a benefit you want to consider. It doesn't necessarily have to be a cost to the company. If a parent's going to be paying $10,000 in daycare anyway, give them the opportunity to get the tax deduction through the dependent care program. Number 5, student loan repayment programs. We made a huge career change based on this idea. We saw it building on the horizon. We get as many questions about this almost as we do from 401ks. This is what everybody wants to offer. And 80% of companies are expecting to offer some form of a student loan repayment program in 5 years. That stat is 1 year old. So in 4 years, 80% of companies are considering some type of student loan repayment program. We get asked about it in every 401k meeting we go to. So here's what you want to know about these programs. First off, they're the wild, wild west. I joke often about how us and our health insurance friends are governed by Nanny Arissa. You know, she's like 100 years old and she doesn't want to change, and it's really annoying, and she has all these rules. And student loan repayment programs aren't subject to any of that, which is really hard because when we sit down with a client or prospective client and they're asking us about student loan repayment programs, we kind of have to open up the door and say, what do you want? Like, what do you want this program to accomplish for you? Are you looking at retention issues? Are you looking at recruitment issues? Are you looking at employees burdened by student debt? You know, what do you want it to accomplish? Because the bottom line is there are no requirements around how this is structured. None. No eligibility or tenure requirements, no income limitation, no contribution cap, no discrimination testing, which means I could just decide that I really like Ray better than anybody else, and so I'm going to give her a student loan repayment program. And there's nothing wrong with that. So it's shocking employers out there a little bit because they know they want to offer one, but it is a little bit of a challenge because it's so open-ended. They have to think through, how are we going to offer this? Who do we need to target? If we're going to target, are we going to offer it to everybody? And the first step is always surveying the workplace. You always have to survey the workplace. So these are, you can have direct pay where you just pay the employee directly and then they turn around and put on their loan. You could have it just as a sign-on bonus. You could have it just as a retention bonus. You could actually decide to match what the employee is contributing. I don't want to go too much into student loan repayment programs because I think that will be our next morning buzz. But the bottom line is 86% of employees say they would commit to a company for 5 years if they had a student loan repayment program. 86%. There's this assumption that these programs only benefit millennials. And I have to kind of correct that assumption because, one, millennials are getting old. I'm dubbed a geriatric millennial, and it may surprise you that the first millennials are turning 40 years old soon. So we kind of have to overcome this preconceived notion that this is only for the younger workforce. And then two, do you know which generation actually has the most student debt per borrower? It's Gen X. Gen X, because a lot of Gen Xers have taken out student loans for their kids in addition to themselves. So this is not just a millennial benefit. The government has made tax law changes to benefit or to further advance the idea of employers getting into the student loan game, allowing for the first $5,250 to be non-taxable. It used to not be the case. Your employees would have to pay taxes on any benefit given to them. Number 6, financial wellness and emergency savings today. I had mentioned the number one EAP program offered is financial counseling. What I really want to emphasize here is the emergency savings account. We all know that people don't have enough money in emergency savings. It was very obvious this past year. Nearly a quarter of Americans have nothing in their emergency savings accounts, which means what we see on our end is a lot of tapping into loans in the 401k. So the retirement plan industry has taken a step back and said, how can we help solve this problem? We've had to humble ourselves a little bit. And one of the things that's being considered heavily is after-tax contributions in a retirement plan. And I don't want to get into the specifics of how it works, but what you want to walk away from this is we have a really great programs in place for automatic savings. Money is automatically coming from paychecks and it's automatically going into an account. And we know that people are more likely to save when it happens automatically. We know it's people are more likely to save if it comes out of their paycheck before it ever hits their bank account. So what we're asking ourselves as an industry is how can we utilize the existing structure to meet this emergency savings shortfall that everybody has? And the idea is at a high level, what if we take the first 2,500 that is contributed and put it into almost like a bank account, which in our world, one of the phrases we would use is after tax, but follow me here, put it into a bank account and have that be dubbed emergency savings and accessible by employees in the event their refrigerator goes out. But then keep the rest of the retirement plan intact. I know this sounds a little far-fetched, but it exists today. It happens. It is an awesome way, again, for you to take a look at that benefit dollar. Maybe it's your match and say, this is a dollar we're already spending, but are we spending it in the most valuable way for the employee possible? And maybe we should be redirecting some of these dollars to emergency savings accounts first. I talked about how it exists today. Flex Match is one of the programs that we have found to be the most flexible, the most cost efficient. And it is an administrator that helps administer not just the student loan repayment programs, but also saving for college in a 529 and the emergency savings account. So when I say it exists today, it exists today. Number 7, tax flexibility. Remember, the whole theme is flexibility. The whole idea around the future of benefits is letting the employee decide where they want their benefit dollar to go. And one of the things that is becoming a huge theme is tax flexibility. If you've watched any of my content online, you know I'm a massive fan of the Roth. I think it's significantly underused. Only 12% of the participants contribute to Roth, even though 85 to 90% of the plans allow for Roth. But we're already moving beyond that. It's not just a Roth in the 401k. It's also in the latest Secure 2.0 Act. The government has, well, let me rephrase this. It has passed the House in Secure 2.0 that your employees may have the option for the employer match to be saved as Roth. Again, a technical explanation would be needed to fully understand it, but know that it's not just the employee deferral that could be Roth. It could be the employer match. And then finally, there's something called the Roth conversion. And the one thing all of those have in common is letting the employee decide, have the flexibility to decide when they want their retirement savings taxed. And number 8, our last, a smoother transition to retirement. When I researched this, I was like, that is such a no-brainer. Why are we not doing that here in America? It's super common in the European Union. This is how they handle it over there. So what they typically do is you're working full-time and then you transition to part-time and then you retire. And they find all sorts of benefit in this. They call it phased retirement because it's not jumping off the cliff for the retiree, right? You're not working 40 hours a week and then all of a sudden not working. So there's a lot of mental components to it. Obviously financial, you're phasing into retirement. Likewise, it's helping transition the job duties better because you have your tenured, seasoned employee there to help train the next generation, but then also kind of step out a couple of days a week and then let them learn on their own, right? So they're finding that this phased retirement is hugely beneficial overseas, and to me it seems really obvious here. So what we're seeing are HR companies really starting to advocate for phased retirement and work on internal policies for meeting it. And then the final thing about phasing into retirement is a new thing in the retirement plan industry, the guaranteed lifetime income, relatively new. The way that this works at a high level is we used to have defined benefit or pension plans where everybody just gets their paycheck and moves on. And there's something very simple about that. The employee never really had to make any decisions. They were forced to save, it was invested for them, and they were told how much they were going to get every month. We overcorrected with the 401k. Now the employees have to decide how much they want to save. They have to decide how to invest it, and then they have to decide how to get it out and how much to pay themselves. One of the things that's new and evolving in our industry is guaranteed lifetime income, which is the idea that employees will be able to take their nest egg, let's say they have a $500,000 401k balance, and turn it into what would look like a pension plan, turn it into a regular monthly paycheck, and do that inside the retirement plan. And of course, the guaranteed lifetime The benefit of that is it reduces the longevity risk, meaning that it's for their life, right? So that risk that they're going to outlive the money is reduced because they've locked in these monthly payments. So, recap. Number one, working from home, doesn't surprise anybody. Online enrollment and digital resources, everybody would have expected that to have been a thing. EAP health programs have changed and evolved. Dependent care programs with the burden of childcare, this is a no-cost program that you can provide that could have a substantial benefit for your employees. Student loan repayment programs, can't emphasize enough that that's the future. Financial wellness has always kind of been there, but emergency savings. How can we help our employees build that emergency savings account that they need? Tax flexibility, letting employees choose how they want their retirement tax, and then a smoother transition to retirement, either through phased working or guaranteed lifetime income features in the retirement plan. So that was it. Under 30 minutes. That was your morning buzz, the high level points. If there was anything I mentioned in here that you think, okay, wait, I need to understand more of that, or I have a question about that, I'll hang on here for just a little bit longer to make sure that I can answer that for you, or shoot me a message on LinkedIn, shoot me an email. We can always set up a call to talk specifically about you or any company that you're working with. And then finally, if you want the full Hartford informational infograph, right, with all of the pre-post COVID surveys, let us know and we can send that to you guys too. So I know now I got to take a drink. So any questions for us? Okay. Guys, thank you for joining our morning buzz. Hopefully you got a little buzz along with your cup of coffee. And we will have another one next quarter. And I think barring any major legislative changes, it will probably be the full student loan repayment program one. That's what we expect. Thanks, Bethany. Thank you. Thank you. Try to make it quick. Okay.